and then we'll
Sure.
jump into it.
Thanks.
Hey, everybody. Happy New Year. It's Chris Frew here with BioBuzz for the Tien. By the way, you're the first What's the Buzz of 2026.
I'm so honored by that. Thank you for having me. I'm really thrilled. Thanks.
So that's pretty exciting. It's awesome to say 2026. So for those of you joining in, What's the Buzz is our interview series where we interview ecosystem builders. And that has a lot of different flavors, right? Like Tien, you do a lot to build the ecosystem, help build companies, raise investment. But we talk to everyone from, state economic development to investors to site heads, anybody that we really believe is working to build the ecosystem that fosters the community that helps life science companies grow. So Tien, yeah, super excited to have you on the program today.
Thank you. It's a real honor to be here, and keep doing the great work you're doing. We need you.
Yeah, we love it. And there's a lot of work to do this year, I think. Tien, so let me give you a little bit of background, then I want you to introduce yourself. So Tien is CEO of Opus8, an investment advisory firm which helps tech companies, investment fund managers raise capital, and also the founder and host of the big idea CONNECTpreneur community, which is a global community of 30,000 investors, entrepreneurs, business leaders, and service professionals. I've been to several of your programs, and they're amongst the top notch that I go to. And you've been building that community for a long time. And so as another event person myself, I really appreciate, again, the experience that you all create there. So yeah, thank you for everything you do.
Thanks so much. Yeah, we're going into the 15th year for CONNECTpreneur. So we're thrilled about it. We started here in the DMV area, DC, Maryland, Virginia, and then we became regional, and now we're doing sort of events all over the U.S., heavy in California and New York as well. And in December, we acquired a 25-year-old event manager called the New York Private Equity Forum, and thank you for putting that on your breaking news site. But they've been around for 25 years, and they've done 140 or so events. And we're really excited. I've been going to that for years, and we're really excited to sort of see if we can elevate it a little bit.
Well, that's exciting. It's a really exciting way to start the new year.
Yeah, for sure.
So again, I know you from a lot of your work that you do locally, but yeah, so New York, California. I mean, I see just the energy that you and your team bring to investment, which is a very challenging, field. So I'm really looking forward to digging into that with you. Hey, before we jump in though, let me do a little bit of housekeeping for everybody joining. So I just want to give a quick recognition to our sponsor today. Our January events are all sponsored by Nova Life Sciences. So if you'll be out at JP Morgan next week, please check them out. Come out for their 12th annual partnering forum. That'll be held at the Hilton San Francisco from Monday through Thursday next week. The team does an amazing job at curating partnerships. You're not going to find a lot of service providers there unless they're one of their sponsors. So it's a very high value partnering. It's co-hosted by MTEC. MTEC's a really great organization. They the Medical Technology Enterprise Consortium, and they have helped startups raise over $1 billion of non-dilutive funding, specifically for like dual use technologies. So if you'll be out there, I encourage you to come and join us. And if you're out there on Sunday, Tien, you guys have a big event, right?
Yeah, we do. We are hosting our annual JPM investor brunch. Last year we had 450 people attend. It's at Fogo de Chão. We rented the whole restaurant. It's Sunday the 11th at 11 a.m. So anyone interested, you can go to our website, opus8.com or connectpreneur.org, and you can kind of figure out, you can get more information on it. And we also have our program book from last 2 years for our brunches, and you can download those if you want to see, sort of the types of attendees that are coming. We publish the list of attendees, so you can see, if you're raising money, you can see the kinds of investors that have come. If you're looking to invest, you can see the types of companies that have attended.
That's great. That's a good segue, and I'll be there. And for those of you coming, awesome. I'll be there with you, and we'll be doing some live interviews with some of those companies that you represent. I think you have 8 presenting.
We have 8 outstanding companies. They're never going to really present. We'll give them, a 60-second sort of elevator pitch, but they'll all have tables there. They're bringing their teams, and they're all pitching at other events. Some of them will be at QNova. Some of them will be at Resi, Biotech Showcase, and whatnot. So, as you guys know, or may not know, it's a 3 to 4 day festival of investment and technology, the JP Morgan Week events. And a lot of our portfolio companies and clients are out there, they're busy like every single day. So that's why we did ours on a Sunday, because we want to do it before sort of the kickoff of the week. And everyone's super excited. Everyone's, really energized for what's going to happen. As opposed to Thursday afternoon when everyone's exhausted. But so Sunday's a good day for this event.
Everybody's going to be fresh and hopeful, right?
Oh yeah.
Yeah. What sure. So you do a lot of work at helping to raise capital, not just for companies but also for fund managers. That's a challenging market, and again, I think it's I'm also a recruiter, right? So I mean, I do matching too, but you do matching on a whole different level. Let's start with like last year before we jump in. How would you what was the experience like last year, raising capital, working with your companies? How would you define that in like one sentence?
Brutal. I would say it in one word: brutal. It was a very tough fundraising environment last year, and 2024 was not much better. Everyone's hopeful that this year will be a little bit an improvement, maybe a thawing of the winter, but it's been really difficult to raise money for early stage companies in the life sciences. In fact, if you're not a pure play AI company, it's been pretty tough all around. Yeah.
Well, given that, I mean, I think we've all gone through this gauntlet of, I would say, 36 months of really kind of challenging, like running through mud. What are some of the things that you do with your portfolio and your companies? Like, what are some of the things that you advise them on, or that you're doing that is moving the needle?
Yeah, so our business has changed quite a bit. Back, say, 3, 4, 5 years ago, it was more about identification of the right investor and making sure that we're facilitating engagement. And it was a much more numbers game orientation, where we would, if we had enough investors that were in the space that were interested, we would be very successful in getting a few to invest. The last year in particular, year and a half, it's been much more narrative building, much more strategic planning on how to approach the sort of investment continuum. And the investors that we're dealing with, we work with your institutional growth capital and VC funds as well, your emerging VC funds, but also heavily with family offices, ultra high net worth individuals, high income and high net worth people. And they have a different sort of way to look at, to approach investing. And they're much more relationship oriented as opposed to transactional oriented. There's a lot of sort of business dynamics behind that. They don't have a defined fund period to deploy and to harvest and to exit. They're not looking to raise the next fund. So they have a totally different way of looking at things, much more relationship oriented, less transaction oriented. And it's more of a continuum as opposed to sort of come in, do your pitch. Okay, we're going to get check or not. It's much more, stay in touch, keep me posted. Let me know when you've hit your next valuation inflection points. And so that's sort of the big challenge for us has been sort of changing the mindset, because the market has changed so drastically, and also to helping our issuers be more strategic in how they approach capital.
That's really interesting. It's I see a lot of relation to the recruitment side, who, when you're nurturing talent, right? So has that changed how people raise? Is it like rolling closes? Are they doing has it changed anything else on kind of how they're applying their capital, using their capital, kind of any other strategy?
Yeah, so I think yes to rolling closes, yes to extensions, yes to multiple issues of securities, and that's really come out of a necessity thing. Like, they need cash to continue, so whatever it takes right now, looking at alternative means, taking companies into more higher visibility or quicker visibility towards revenue. So we have some therapeutics companies that have a CPG play. but the CPG play is a much quicker path to revenue. That's attractive. You're seeing Reg A, Reg D. You're seeing a lot of Reg CFs now. We've got several companies that we've worked with that have been very successful in the crowdfunding space. These things wouldn't have happened 3 years ago, because 3 years ago you had a traditional means of raising money. But I think because of the way that institutional capital sort of dried up a little bit, that the founders have been forced to figure things out. Definitely doing things in a capital efficient way, critically important right now. You're seeing some offshoring of some development and testing, and that's a smart move as well. They're taking advantage of cost savings and tax incentives and other things, where 3 years ago they probably wouldn't have done that. I don't know if I'm answering your question. I'm kind of rambling,
no,
but yeah,
I mean, the whole landscape has shifted, as you know. Like, and again, you're right in the middle of it all. So like that's why I wanted to have you on today, and I'd love for you to share, kind of as you think about those things and you think about the companies you're working with, like going into this coming week. I heard you talk about a narrative. It's a more of a narrative approach with investors. Different paths to money. I'm sure partnering is probably more important than ever for some of these companies. What do you talk about some of the advice that you're giving, to startups in your portfolio? Like, how are we approaching next week as we go into this festival of investment?
I think the number one thing is, do not try to pack your schedule back to back to back with unqualified meetings. I think and the other thing I would say is, do your homework extensively. Nothing will upset an investor more, because they're getting 300 emails a month, to invest in, one deal maybe. Nothing will upset them more than having an unqualified mismatch of what they're doing versus what the founder is doing. So doing the homework is absolutely critically important. Like the event, the Qnova event, for example, or ABD or Resi, you have portals, you can do the homework, you can see what investments have been made. And also, I wouldn't invest with someone who's raising a fund right now or who doesn't have dry powder. Yeah, you can go and have your meeting, and they love you, but they don't have the ability to write a check. So that's a waste of time. And I think JP Morgan used to be a transactionally driven place. Now I think it's more of a business development place, where, this is just the beginning for the year. So Chris, if you're a founder and you meet with a couple of great investors at JP in January, you have to actually stay in touch with them throughout. It's not going to be, they're going to write a check Q1, So I think it's moved more away from being sort of transactional and much more into, storytelling and making sure that you're having a good match with the people you're meeting, because it demonstrates a lot of things. Obviously, it demonstrates you're prepared, that you are being professional about it. So whereas 3-4 years ago, 5 years ago, you would see people having meetings indiscriminately, and that might be fine, but in today's market, that's not really good use of anyone's time.
Yeah, so like very purposeful, right? Like everybody has to be very purposeful about how they're approaching this week. This is my first time, by the way. This is my first time out to JP Morgan, so this is all part of this. I'm taking in myself here, Tien. What about with investors right now? You talk about staying in touch. Like, so there's a whole communication strategy that you're working with now that probably was a lot less of important, like CRM management, investor outreach, strategic outreach, good storytelling. Like, is that all much more important than it has been in the past?
I think the issue with staying in touch is, after a good meeting, let's say, right, you have a good meeting where both parties are interested, is noise, signal and noise. These guys are getting flooded, because if you put yourself out there as an investor, you're just going to get tons of unqualified solicitations. I know investors on the call today, they know exactly what I'm talking about. And, you mentioned Deb. Deb spoke at Deb Hemingway from McFor. She spoke at our CONNECTpreneur event at Johns Hopkins in November. And she said she looks at 300 deals to write one check. So that's the kind of noise that's out there. So as a founder, you have to figure out ways in which to engage with these people, even having sort of someone walk you in a second and a third time. Investors are getting so many unsolicited things. They don't even know where to look. And I'm talking not just for VCs, but also family offices and high net worth. So they look towards people they know and trust.
Mm-hmm.
So to the extent you can continue using a friend, an attorney, a service provider, someone to help you with that investor, that's how you're going to increase your odds of getting their attention. And if you can get their attention, you increase your odds of getting funded.
Yeah, that's great.
Because attention is the main currency in today's fundraising environment, trust and attention.
That's great. Interesting fact. I read this today, Tien, which I was surprised to see. I read the LinkedIn's 2026 jobs on the rise.
Mm.
Venture partner was like the top one in the top 20. And I just thought that was really interesting. I don't know. And when I hear you talk about kind of leveraging relationships, introductions, getting attention, I couldn't help think about our conversation coming up. And I wonder, like, is that because of a lot of this that's out there, that VCs are engaging more venture partners to help with, help get through that noise to figure out what's worth their conversations?
They really are the smartest investors. VCs they have a battery of venture partners. I'm a venture partner at Iron Gate Capital Advisors. I think there's probably 15 of us. My main goal for them is to help them with LP money to raise capital for them. But they also want trusted introductions to high quality portcos. That's really why they're there, and also to provide some operational advice. So a lot of the venture partners that have worked in, they've been C-level executives. They might be able to parachute into a portco and help fix it or help grow it. But the main thing I'm seeing is capital. Even the VCs are starved for capital. So any VC raising a fund right now or planning to, they will tell you that it's just as difficult for them to raise limited partner capital as it is for their portfolio companies to raise, growth capital or VC money. So it's basically a tightening all across the board. And my advice for the VCs and PE firms we work with is the same exact thing. It's a trust thing and it's a numbers game. And LPs are doing the same thing that VCs are doing, which is they get flooded, they don't respond. So, it's sort of like a cascading effect down the stack, But yeah, I think that's a reason why they want more venture partners. They want more access to capital as well as access to deal flow and also expertise.
Yeah.
Whereas your VC funds 10 years ago didn't have 15 venture partners. They might have had a few. They might have had operating partners, they call them, But now it's changed a little bit. They have to figure out a way to differentiate themselves too.
Yeah, I see a lot of VCs really taking to LinkedIn more and doing like a lot of more branding than I had seen, in past years as well. And maybe that's just part of because there's more technology able for them to do that easier. But I am seeing VCs really kind of doubling down on like, here's who we are, here's what we invest in. Again, being like trying to get their thesis out there very crisp and clear.
Yeah. It's a signal to noise thing like we just talked about. They used to be on X, Twitter, right? Every VC was on Twitter 5-6 years ago. And very few were on LinkedIn. Not as many were on LinkedIn. Now you're seeing much more of a migration. Why? Because Twitter is sort of like sound bites. It's your 60-second clips. You don't get any depth with it. It's a lot of noise and less signal, whereas LinkedIn definitely has a lot more signal and less noise.
Yeah.
So maybe that's sort of what they're looking at,
Yeah.
But I'm with you. I see a lot more information and posts on LinkedIn from investors.
And I think, me though, Tina, I'm a storyteller, right? So I think the story is really important these days. It does build trust. And it's not just, I think sometimes founders, they look up through this lens of, lately despair, right? Like, who's going to fund me, right? But they don't often see what you just brought through. Like, there's a cascade of issues that is tightening capital. And so that's really good insight that you just brought. The other thing I want
to look at PitchBook, like if you PitchBook, I believe was last year, we did some research. 45% of the institutional VCs listed on PitchBook are not actively investing today. So either they are out of dry powder, or they are, unable to raise their next fund, or they're reserving for future, follow-on investments, but they're not active. But they're all taking meetings. So that's a really big thing for founders is you got to figure out if you're meeting with a venture capitalist or any investor, how much powder do you have? How many deals have you done in the last, 3 to 6 months? What are the deals? How much capital do you have to deploy? And, try to understand that they are a qualified person to meet with. Otherwise, they're just right now a tourist or kind of not serious. They're doing the panels and the meetings and the speakings just to check the boxes for their LPs or for their other general partners. It's just kind of a big dance, but we see that all the time.
Yeah, you wrote an article about this. What you called them?
Zombie VCs.
Zombie VCs.
Nothing against VCs. They're, I'm a venture partner in a couple of funds, and I'm an LP in a few funds, but I love VCs. But yeah, there are some zombie VCs that just basically are going through the motions. They're not actively deploying capital, and that is a differentiation that founders need to know. And founders should not be afraid to speak up, ask the tough questions, because they don't want to waste their time, and they'll get a lot of respect back from the investor because they're doing their job.
Yeah, no, that's great. And I think that I go back to, it's mutually qualifying now. Like you have to qualify who you're meeting with as an investor. And because if you're going to invest even more time in nurturing and trying to break through the signal and break through the noise, and like, you got to know who, is on the other end of the line, right? You got to know who you're talking with. You got to know, like, how qualified is this person, likelihood they're going to invest this year, because I'm going to be putting more time in the ones most qualified.
Yes, no, for sure. 100%.
So we're, I love the start of the year. Hope is everywhere, right? This is always an exciting week. I'm usually an observer of the JPM Healthcare week, but coming out of it, there's all kinds of predictions and thesis on what the year ahead will be. Speaking of signals, like, what are some signals that you're looking at this year as a venture partner and for your raising for your portfolio? What are some signals that you're looking at this year in the capital market? And what is that telling you?
Yeah, I think on a macro level, we're hoping that the financial and economic markets are cooperative, and that'll lead to more, availability of private capital. And what I mean by that is sort of, you'll see more M&A activity. You are seeing some M&A activity in select spaces, but also IPO activity, because until and unless the institutional investors, let's say the big PE firms, and then, the growth VCs and the VCs and then the angels, and, start seeing liquidity, they can't return capital to their investors. So once they return capital to their investors, that can be recycled. So that is one thing we're seeing. And also, if the stock market takes a big hit, that's not good either, because you have the denominator problem, which means that your institutional allocators, right, your pension funds, they have certain statutory requirements in terms of what percentage of their asset allocation goes to alternative investments, as opposed to public equity or public debt or whatever. So, that could be a macro factor as well. And I think that on the micro, I think, our advice for founders is to ignore the noise if you can, and just try to be as efficient as possible, lower risk as much as possible. And I know that's a generic comment, but, I think they got to focus on the fundamentals, frankly, and try to get if you're going through regulatory, if you're a med tech, making sure that, that you're setting yourself up for success with your investors. And, you want to build for your end customer as opposed to your investor. The investor is sort of a necessary evil, who you're paying in equity to give you capital to get to your customer. But, last 2 years, I left JPM optimistic. So I feel gun shy about being optimistic this year. I feel like, we just have to assume that it's going to be at least business as usual for the next couple quarters, maybe for the year. I can't see it getting worse. I really can't, but anything can happen. So I'm going to leave the prognostication to JP Morgan bankers and Goldman Sachs bankers. They know a hell of a lot more than I'll ever know about that kind of thing.
Yeah. My common response, Tien, is, well, let's see. I think
it's true.
Yeah. And that's how I always am. I mean, I just think, things that you think are good can sometimes turn out bad. Things that think are bad can turn out good. So I think my approach is always, let's see. In the meantime, you got to do, I love that advice. Do what's best for your company and your customers. And I think the companies that can avoid the noise and stay focused on that, like you're building a product for customers, for patients. If you stay focused on that, some of the rest does fall into place as long as you're, again, have partners like you, and you're nurturing the right investors and along the story. And
I mean, it's really hard to do when you're bleeding cash every month, because a lot of these companies all of them are pre-revenue for the most part. And, you're nervous because you only have X months of runway, and it's really, really difficult to stay calm and stay focused and, to work on the things that you can control as opposed to worrying about things you cannot control. But, we saw this in the 2008, 2009, the financial crisis. And you saw a lot of restructuring of business, restructuring of the financial markets, and sort of a shift in mindset too with early stage companies. And I think we've seen that, the last 2 years, people have had to adapt. I mean, the good news is that we're adaptable creatures, and hopefully, the best companies will emerge from this market. That's for sure. Like any company that's emerging and doing well now, that's a probably very good bet for the future, because if they can make it through this market, they can make it through a much easier market. They're going to do great, actually. And that would be my prediction.
I think you're right. I've gotten advice from some of our advisors who've told me that just don't die, and you're going to rise to the top. Like we're a startup ourselves at BioBuzz. We're kind of we decided to pivot in the worst 3 years of fundraising, but that's been the advice. Like, you make it through. And like you're gonna, what do they say? Steel sharpens steel. You're gonna be sharp. You're gonna be leaner. You're gonna be able to operate doing more with less, and it sharpens you.
Oh yeah, for sure. I think it's a lot. The inverse of that would be a problem. You have unlimited amounts of money being thrown at you, and you don't develop any culture. You don't develop any grit. You don't develop that sort of startup toughness that you really need to succeed, So I think we'll look back on this period and be thankful for it. But while you're going through difficult times, it sucks. It's really hard. Yeah.
Well, nobody does this because it's easy. And I think, you brought this up today. It's not easy for investors now either, right? So we are all in this boat. So Tien, I want to respect everyone's time who's joined us today, but I really appreciate your advice. I mean, some of the things I'm taking away from today is I love the signal versus noise concept that you talked about. I think that's really good advice that we can all kind of grab onto. And then again, just purposeful qualifying, pre-qualifying your meetings next week. Your time is critical. You spend it with the people that you see a potential relationship with, and I think that's really good advice going in. Again, from someone who's never been, but like that seems to be really kind of on point insights. Any closing thoughts for our audience today before you see probably a lot of them?
I think just for JP Morgan, it's like a candy store. There's a lot of different investors, a lot of different things, a lot of different events. But like you just said 3 seconds ago, you want to make sure you're being intentional and very deliberate about where you're spending your time. It's very exhausting. There's numerous events going on, ancillary events being thrown by, international governments, foreign companies, not so much investors, but definitely a lot of law firms and service providers. And the key is to try to do your homework and figure out where are you best going to, where do you benefit best in terms of where you allocate your time, and try not to do like a little bit of everything. It's definitely much more smart if you go in and be purposeful about it. And also just Bio International, they have a mobile app that has all of the events for JP Morgan 26 starting on Sunday through, I think it starts on Saturday. They have events before the JP Morgan week starts. But you can download that app and you can see all of the different events and opportunities that you can have. And some of them are paid events, some of them are free, some of them are invite only, some of them are open to the public. So, but I think it's going to be very rewarding for you and for others who are out there. And yeah, just be smart about it and enjoy yourself. Yeah.
That's great advice. Well, I look forward to seeing you just in a couple of days in person, Tien, at your kickoff breakfast, where we're all going to be.
Thank you for partnering with us on the brunch too. Really appreciate it.
Oh, it's our pleasure. I for those who are not familiar with CONNECTpreneur or Opus8, definitely go visit. They do a lot in the DMV area where we're at. So I highly recommend the programming. If you're an investor, again, highly recommend. I know a lot of your companies that you're representing now and really sharp founders, really a great technology. So, and we'll put links in the show notes here too. So if you need a way to get in touch with Tien or find the events we've talked about today, we'll have that all there. And if I don't see you there, I hope to see you at the QNova Forum going on that week as well. Stop by and see me. Stop by and see Tien, and let's make next week
yeah. And Chris, QNova is like 4 days, right? Monday through Thursday.
It is 4 days, yeah. And different themes each day. MTEC will be doing a big program around non-dilutive funding. Talk about extending the runway. And it's interesting. I've learned a lot this year, Tien, about dual use. Mm-hmm. And there's a lot of companies building healthcare and medical technology products that just don't realize that there's a very clear use for the warfighter, mm-hmm. For the Department of War, or and there's funding that can be non-dilutive and extend your runway if you can get your narrative and frame your narrative really around what the warfighter needs and what the Department of War is investing in. So if you think your product could fit with that, the QNova Forum is a great opportunity to come out and meet with some groups, not just MTEC, but Battelle will be there and several other government funders will be there as well. So
fantastic. Yeah, I'll be at QNova, so I'll see you there as well. Yeah, good luck with that event. Hopefully it'll be a great one. I was there last year. Well. They did a good job last year, so I can only imagine it'll be better this year,
And and what I've learned and really getting to know them, and you're like this too, Tien. They make introductions, right? The curated introductions. Like, so when you're attending an event, the team has been working tirelessly to understand who's partnering and who's coming, and they have a partnering app. And I've just been really impressed by that. The curated, purposeful introductions that their team is helping to make. So I think those are things that probably elevate the experience and help people to, again, make sure they're making the right meetings. So I'm excited for it. So for those of you who don't make it out there, join us next week. We're doing a post JP Morgan BioBuzz, or the week after JP Morgan, with Roger Elias from Kymenox. So we'll be doing a full recap as much as we can to share with you what went down in San Francisco. So until then, Tien, we got to sign off. Thank you very much for being part of this. And hey, first one of the new year, my friend. So
thank you. It's an honor.
Maybe we got to have you back at the last one in December now.
I would love to.
See how this year went. All right, sir. We'll talk to you soon. Thank you all for tuning in.
Thanks. Take care, guys.
Take care.